Welcome to this week's look at the state of the New York City real estate market. This is for the week of June 30th to July 6th. We'll be looking at what is happening in the Manhattan and Brooklyn markets, the luxury market here. I'm also going to give you kind of an overview of what's been happening in this spring market, kind of where we are now, where we thought we were going to be. And some in-between information. So be sure you stick around for that. If you are an active buyer or seller, this will be especially important information for you. We'll get started now with the luxury market. There were 18 contracts signed last week. That is 10 fewer from the previous week. So it was a bit of a slower week. Could it be because of the 4th of July holiday? It's hard to know. But, still pretty solid showing in the luxury market. The number one contract was Penthouse 16 at 109 East 79th Street. It was asking just under $35 million, reduced from $38 million when it was listed a year ago. This is a condo. It has a little over 6,500 square feet. It includes 5 bedrooms and 5.5 bathrooms, living room with a fireplace, formal dining room, and a library, open onto 2 terraces that total 640 square feet. And those overlook 79th Street. The ceiling heights are quite nice at 11 feet 2 inches. This building is a new 20-story, 31-unit condo that was designed by Stephen Harris Architects. The amenities include doormen, regulation-size squash court that converts to a basketball court, a gym, golf simulator, game room, and a spa treatment center. The number 2 contract was 62E at 217 West 57th Street. It was asking just under $19 million back in February of 2018 by the sponsor for almost $23 million. The condo has 3,364 square feet, including 3 bedrooms and 3.5 bathrooms. The corner living room has almost 11-foot ceilings and it faces Central Park. The unit is in Central Park Tower. It is a 1,550-foot tall skyscraper with 179 units and over 50,000 square feet of amenities, including an outdoor pools, a fitness center, and a children's playroom, plus a ballroom, bar, dining facilities, and a cigar lounge. The total weekly asking price sales volume, $177,874,990. The average asking price, $9,881,944. Median asking price, $6,597,994. Average discount from original ask to last asking price, 9%, and the average days on the market, 986. That is it for the moment about the luxury market. I'm going to be sharing some additional information with you about the luxury market at the end of this report. In the meantime, we're going to take a look now at what is going on in Manhattan and Brooklyn. So in Manhattan, we see that the overall supply continues its downward trend. The weekly supply is approaching its seasonal lower level. We see typically around July 4th. On the demand side, there was a slight increase at both the weekly and overall levels. This may be a reflection of some deals that were kind of delayed due to the holiday last week, but looking ahead, I think we can expect to see the seasonal effects beginning to kick in, and I would imagine we would begin to see the activity overall kind of declining. The supply for last week in Manhattan, 144 properties came on the market. That's down almost 45%. Contracts signed, 183. That's down about 23%. Off-market properties, 267. That is up 49%. The supply for the month, 1,087. We see that is also down a bit, 36.5%. Contracts signed, down about 8.5%, 934. And off-market properties rose almost 42%, 806. Could be those sellers that aren't getting things done and are just getting tired of this market. So they're just going to pull their properties off the market, at least for now, and perhaps they'll be bringing those back on in the fall. We're not yet sure. If we look at the market pulse reading, it's actually rising a bit, so it's a little more imbalanced. Again, this fluctuates quite a lot. This is up a little bit, 0.8% from last month, and actually down 0.4% from last year. But you can see, we had really dipped into the buyer's market territory. We're rising up a bit, a little closer to neutral. The liquidity pace chart, the 30-day moving window of contracts signed, 934. That is down 4.5% from last month, down 3.7% from last year. As I said, I will be giving you some additional information about what is going on market-wide by sector, of course, in the luxury market and then the Manhattan and Brooklyn market. So be sure, if you need this information because you are actively in the market as a buyer or seller, that you stick around for that. Now we're going to take a look at what is going on in Brooklyn. The demand, both overall and weekly, has increased as compared with the previous week. And so it is a little too soon to tell, but it may be that the market in Brooklyn gets a little stronger than it has been, or at least stays pretty strong throughout these next few weeks. The supply is a little more, as we would expect to see it seasonally speaking, so it's down a bit. The supply in Brooklyn for the week, 104. That is down 37%. Contracts signed down a little over 13% at 111. Off-market properties rose a little over 35%. 127 properties came off the market for the week. For the month in Brooklyn, the supply is 709. That is down a little over 29%. Contracts signed 583, also down about 12.5%. The off-market properties, 369, is up 67%. If we look at the market pulse for Brooklyn, we're seeing that it's up 1.4% from last month, down 1.2% from last year. And kind of as with Manhattan, although it's a little bit of a stronger market because the demand overall is stronger than the supply, we're seeing it kind of hovering in this neutral place. In Brooklyn, the liquidity for the last 30 days, 583, that's down 7.3% from last month and up 1.2% from last year. Again, kind of in a overall neutral place. That's it for the weekly, monthly stats for Brooklyn. We're going to take a little bit of a deeper look now at the market conditions, how these different sectors are performing when compared with each other. We'll look at the mortgage rates, and as always, I will share strategies with you to be effective in this market for these specific market conditions. So in the luxury market, we saw a bit of a pullback. This could be holiday conditions. We're not entirely sure. There were 18 contracts signed, 10 fewer than the previous week. 5 of those were at the trophy category level. It priced at $10 million and above. 13 were condos, 4 were co-ops, 1 was a townhouse. 8 of those properties were uptown, 10 were downtown. In Manhattan and Brooklyn, the total supply for Manhattan, 6,852, Brooklyn, 3,406. Pending sales in Manhattan, 3,484. Brooklyn, 2,262. Off-market properties total 3,448. Brooklyn, 1,658. Average days on market in Manhattan, 64, and in Brooklyn, 46. Liquidity pace chart, 30-day moving window, Manhattan, 934, Brooklyn, 583. So here's what we know. We've basically gotten through quite a number of months of our spring market, so we know a fair amount. What we're seeing is the really kind of divided market conditions. This is, you could call it a tale of two markets. The luxury tier was very strong and mostly powered by cash purchases. In fact, 69% of all the Q2 sales were all cash, and that is the highest ever recorded here. Perhaps the recovering financial markets and a weakening US dollar made the New York City market especially attractive to those international real estate buyers. The entry and kind of mid-level market segments are seeing much slower, more deliberate pace. The sales activity did tick up, but prices held steady and inventory grew a bit slightly. These are signs that buyers are really taking their time about making a decision. 80% of the finance buyers included mortgage contingencies in their offers. This also points to less bidding war pressure and more room for negotiation. As I said, we are in a kind of a divided market, tale of two markets, right? Where the cash buyers are moving quickly, confidently. The financing buyers are proceeding with far more caution. Let's take a look now at some of these charts. We'll start with the mortgage rates. Looks like they've gone down a little bit. They're heading down a little bit. I think that is encouraging buyers who are financing. They are kind of jumping into the market a little more. We've seen an increase in the contract activity, so it could well be to do with those slightly more compelling interest rates. If we look at the conditions in Manhattan and Brooklyn, kind of taking the luxury market off the table for the moment, we're seeing that we don't have all the data yet for Q2, but we generally are seeing that prices, believe it or not, are increasing a bit in Manhattan. The discounts, however, and the days on market are decreasing. This might seem like good news. However, it is also a bit confusing as many of these deals were signed before the market hit the speed bump. So as I've said to you, March was great. We were really off to a strong start. Then we got a lot of macroeconomic news in April, and things kind of, you want to call them a speed bump? I guess we could call them that. Anyway, things just got bumpy, and the market has been going forward in kind of fits and starts since then. We do have these reports of rising prices. However, the real-time activity and seasonal factors are kind of pulling things down a bit. It is genuinely a confusing time for both buyers and sellers. It is very important that if you are in the market, you are working with the best advisor you can find, someone who really knows the market, who's been through different kinds of market conditions, because, we often refer to markets as being buyer or seller's market. This is neither of those things. This is what I would call a broker's market. Unlike a lot of other markets, we have a delay in our data. So, can be about 3 months before we see where we were in a very kind of concrete and specific way. This can lead to even more confusion and create, I would say, false expectations. That's why having a really strong advisor at your side who really understands market conditions and who has more, let's call them, tools to work with, will be able to help give guidance during this time. Because if you look at the early data from the spring, it creates a kind of an impression that this is a very strong market, strong prices, lots of activity, and that was true then. It is not true now. And so it is a challenge to create a strategy for success that will help you get your property sold if you're a seller within those first 30 days, if at all possible. And if you're a buyer, when you can be trying to leverage the market conditions to your advantage. And each situation is unique. So again, strong advisor, absolutely would recommend that. Someone who really has a lot of experience in the market, understands the market conditions. If you don't have somebody like that, you can always ask me questions. Please, reach out to me directly at Sotheby's. You can also post your questions below. In Brooklyn, we have a little preview of Brooklyn's second quarter data, and that shows that the Median pricing remains largely unchanged year over year, while the average sales price rose nearly 5%. At the same time, there's an increase in discounts and days on market, which supports that the median sales price is perhaps a little more on target and basically showing us that this market is moving sideways. The listing discount in Brooklyn of 3% of the original asking price does indicate that the market in Brooklyn remains tight. So again, I am happy to answer questions for you. I do it for my clients because I know how important it is to be making wise decisions, and you need the information to be able to make a wise decision. If you have any questions at all, please post those below, or you can always reach out to me directly at Sotheby's. I'm always happy to help you with your real estate puzzles, questions, problems, things like that. So what does this mean? If you are a seller, June proved to be a challenging month for sellers. The price action, as I said, is not yet reflected, so likely we will see that going down. The listing discount is down 3.9%. And this market pulse is kind of in a place where it is somewhat neutral, but a little bit favoring buyers. What I can say is this: if you are a seller, you want to get your deal done, now is the time to take action. Very likely it is your price. If you're not getting the traffic or the offers that you need to get your property sold, now is the time to make that price adjustment. If you're not in a hurry and you want to wait around and roll the dice and see what happens in the fall, you can do that as well. But if you want to get your deal done now, then do not delay. Take action. There are buyers in the market. They are looking for opportunities that make sense to them given the market conditions. Buyers, there are some good opportunities for you, especially with those properties that have been on the market for a while. You definitely will have a little more leverage there. You heard me say that people are including mortgage contingencies with their offers. This helps to ensure that, if there's some problem, you can not move forward with the deal. But look, the main thing is you want to have your ducks in a row also. If you are a solid buyer, you are pre-approved. If you are financing or if you're cash, that you're really ready to go, that will help you be successful, because there are those times when you will have competition and you don't want someone to best you because you weren't quite ready to enter the market. Sellers are always looking for solid buyers, financially solid, really clear about their timing. They don't have a lot of obstacles in their path in terms of being able to close. They don't need to sell a property before they buy a property, etc. Buyers, help yourself to be successful here and take advantage of market conditions, because we know, as in other things in life, things change. So right now, you have a little advantage. Take advantage. Okay, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.